First of all, I'd like to say that I like this music that starts in the beginning. It puts you in a good mood. And I just realized before I really start that there are supranationals and sub-sovereigns. This is interesting. I thought that countries and nations were also sovereign. But anyway, that's not the issue. Excellencies, ladies and gentlemen, it's a privilege and honor to be with you here today for the 6th edition of the Capital Markets Seminar. Let me tell you that I'm delighted to be opening it today, and I would like to highlight that we have lots of players in capital markets in the room today, but also a lot who are listening to us in streaming. I'd like to start with a few special thanks on this year's edition. First, to highlight the presence of Johannes Hahn, the Commissioner in charge of budget and a lot of other issues in the Commission. Johannes, you've been with this Capital Markets Seminar since the start, since the first edition, and I would like, on behalf of all of us and also personally, to thank you for your commitment to this event and to your team. Having talked with you just a couple of minutes ago, you have confirmed, and I think you're happy that I confirm, that you're not going to run again for a post in the Commission, which you have done for 15 years, and I think Commissioner Johannes Hahn deserves a big applause for that. And this is meant from the bottom of my heart, because you have gone for the last 15 years, and you will hear about it in my speech. A lot has happened in the last 15 years, so you have seen lots of transformation. You've had 3 different presidents of the Commission, and you have lived through all of this. And the good news is Europe has done well in these difficult times. Let me also highlight that I'm very pleased to be a co-organizer as ESM, European Stability Mechanism, together with the European Commission and the European Investment Bank, and to welcome, although she is not with us here today, but she will address you tomorrow morning, Nadia Calvino, as the new EIB president on this event. Nadia has been for 5 years the Minister of Finance of Spain and my colleague, and I'm very glad that she is committed to this event in the same way as her predecessor was, Werner Hoyer, whom I salute, because he was also a driving force in having this event, which is much more than just an event. Let me say, before going to the heart of the matter, that unity in Europe, for me, is a key factor, and it's a key factor not only for the capital markets. I would like to say it is important for the whole European construction. And how Europe can stand united and bring fresh perspective to tackle the future challenges, I think, is the key question we have in mind. We have it in mind for what is your job in the room here, and is very important on capital markets, but it really goes beyond that. And I would like to acknowledge this in the beginning of my speech. Unity is being stronger together. It implies cooperation. It implies solidarity. And these values are at stake in the upcoming elections of the European Parliament. So we should really not lose sight of that. I mean, we are with the feet on the ground when you're talking about capital markets and bonds and issuing, but this project goes really, the European Union goes beyond material things, and as the Letta report rightly says, we are more than a single market. So the main lesson I draw from World War II and the opposition between European countries is that we want to push further this peace project, and we want a cooperation together with all the countries that makes us stronger. if you think about it, staying with history just a couple of minutes, the Benelux countries back in 1944 already envisaged that, because the war was not even over, that the three Benelux countries started their customs union and were envisaging and then developed economic cooperation. And obviously the idea of Jean Monnet to have the coal and steel community in 1952 was already building on that, and the three Benelux countries were part of the six founding members. Then came the European Economic Community of the EU, and then its strongest form of cooperation is obviously the Euro area, the 20 countries that today have the Euro. Soon, hopefully, also Bulgaria, which is in the last phase of joining. We would be 21 out of 27. Closer to where we are now is the last 15 years, and we have gone through really quite upheaval, not only in Europe but also worldwide. Obviously, the great financial crisis, then the euro sovereign debt crisis, the pandemic, the war in Ukraine after the aggression of Russia, and the following issues of inflation and energy prices. As Jean Monnet put it, Europe has been forged in crisis and will be the sum of the solutions found. And I think we have learned that lesson, we've kept that in mind, because I think that those crises were never wasted, and it was the case also in the last 15 years. Europe has delivered in all those crises. And they were not homemade, those crises. They were mainly external shocks. So ultimately, the euro area and the EU have made significant strides in bolstering our own resilience. The integrity of the euro area was preserved, which is a major achievement. When you think back to the Greek crisis when I was a finance minister, the whole construction was at stake. There were even some who advocated that the weaker ones should be left alone. That is not what was done. So I would say that in the pandemic we had an external shock which was of the same nature. And we again acted together in a coordinated manner, both at European and national level. So we were able to have an unprecedented solidarity in the context of the pandemic. And I think Next Generation EU program is the best example of that. This Next Generation EU allowed us to build the premises for a reconstruction. It helped us in the transition to a greener and a digital economy. And last but not least, and that's the word solidarity in the whole thing, roughly half of the 750, 800 billion that have been financed by member countries for this program are grants. Are grants. They are not loans. So this tells you a lot about what we have achieved. And to be quite transparent, obviously the beneficiaries are the countries that are more vulnerable. So we have a mechanism of solidarity in NGEU which is unprecedented. If you had asked me in 2019, prior to the pandemic, if the EU was ready to do such a thing, I would have said, you're a dreamer. And those of you who know me personally know that I'm a real optimist, a born optimist, but I would not have dared think that that was possible. And I was part, as a finance minister, on the night of the 9th of April 2020, when most of these decisions were taken. So it was an act of solidarity, and we should be aware of that. I think it's one of the major commitments that we Europeans have done that shows our belief and long-standing commitment to Europe. And just 2 years after the pandemic, we have the aggressive war of Russia to invade Ukraine, which creates another human tragedy, because the pandemic was, on top of human tragedy, an economic tragedy. And again, I think Europe delivered a steadfast response. We have proven that we can be more resilient than many expected. And I think this is something we have to keep in mind, coming back to the sentence of Jean Monnet. We are now at a new crossroad. Europe is confronted to, I would say, 4 major long-term or medium-term challenges. One is, and I would like to really insist on that as the first one, is the ongoing war in Ukraine and the defense and security issues that pertain to that. Second, geoeconomic fragmentation. Third, climate change. And fourth, population aging. I have left aside digitalization, which is in the back of our mind. This is pervading in all the activities we have. But in terms of what we have to challenge, these are the 4 issues. They require enormous financial resources. Mario Draghi, who spoke to the finance ministers in Ghent in the informal ECOFIN or Eurogroup, mentioned that we will need for 500 billion euro only to tackle the dual transition in the next years. Now, 500 billion per year, out of which, it's difficult to have a precise number, at least 2/3 have to come from the private sector. But that means that 1/3 has to come from the public sector. So how do we want to tackle that? Now, as ESM, we are responsible. We are there to safeguard the euro area if things go wrong. We're there, as some say, as lender of last resort, but we also have instruments, precautionary loans, to prevent the last resort. But what we're there for is to make sure that we anticipate, prevent financial risks, identify them, prevent them, and in case they materialize, help countries get over it. And we have a new Stability and Growth Pact, and this Stability and Growth Pact has learned the lessons of the weaknesses of the past model, which we have all seen and which I have observed in my former jobs. And that had at least one weak spot. There were others, and that is that it was a Stability and Growth Pact that was not focusing enough on public investment needs. So the new pact will ensure that more attention is put on that, and it also makes sure that will ensure sustainable public finances. And the other thing that the system has built in is that we ensure that we have sufficient national buffers in public finances for the next shock to happen. And unfortunately, we've had recent experiences that shocks are happening more often than we would like, and very often shocks that were not predictable. Who could have predicted the pandemic? So it is important to know that there's also an effort of fiscal consolidation that needs to be done in many countries for the simple reason, because of the shocks we've just lived through, many budgets, national budgets, are very much strained. So in this context, and with the public investment needs that I've just mentioned, there's been many calls for additional common financing systems at European level. So there's been a lot of calls for public financing or European financing for defense and security. I remember a couple of months ago, Charles Michel here in Luxembourg mentioning, as the President of the European Council, that we should issue European defense bonds. Enrico Letta, in his report, which I already alluded to, which is called Much More Than a Market, suggests that the ESM should establish a credit line to help its member countries finance their defense and security expenditures. Olli Rehn, the governor of the Central Bank of Finland, suggested allocating funds from the ESM to fund aid to Ukraine. Former Prime Minister of Luxembourg and President of the Commission, Jean-Claude Juncker, also suggested that the ESM should help Ukraine. There have also been broader proposals. In his speech at the Sorbonne, I should call it Sorbonne II speech, President Macron suggested that European financial stability mechanisms, with an S, should finance European investments. President Macron also recently mentioned that the EU should double its budget. Johannes, you'd be love to hear that. Unfortunately, you will not be there to implement it, if it so happens. The Letta report also recommends marketing safe assets of the European Union institutions under the same name to create a common European safe assets. We have discussed this issue over lunch, and yes, there's lots of ideas out there. So it's difficult to avoid this debate. In fact, avoiding this debate would be like putting your head in the sand. So let me, from the ESM side, describe to you how we assess the situation. First and foremost, what has already been achieved and what the ESM, European Stability Mechanism, can do. Now, recent history has shown that funding through European institutions has yielded positive results. And this is a kind of technical language. I think it is a spectacular result. European safe assets constituted by the issuances of the European Commission, by the European Investment Bank, and by the ESM have recently broken the €1 trillion mark. That's a considerable number. But before thinking about new forms of common financing, I think we should use what is available. First and foremost, in NGEU, there's still a lot of funds available for countries. Second, the ESM current lending capacity to its member states is €422 billion. So let's not forget what we have done. I'm not saying this is eventually enough or not, that's not my call, but it's to say there are instruments available. So what can the ESM itself do more or do, and also in context of the calls for more action on our side? When I hear the ESM should help Ukraine, to put it very bluntly, let me say the following. The ESM is there to support its member countries, and its member countries are 20, the ones that have to Europe. We can only support our members, and we have to respect our mandate. If there were to be a consensus from the 20 member countries of the Euro area to support an outside country, we need to change the treaty. The second point is the mandate of the ESM to ensure financial stability inside its remit. And we have a precedent in the in the pandemic. The ESM proposed the pandemic crisis support instrument in the night of the 9th of April, and the goal was that we would have a credit line to support the member countries in order to avoid financial stability risks. And it was set up for that purpose. In the same line of thought, the of thought, the Enrico Letta report proposed that the ESM create a credit line for defense and security expenditures. There would need be a consensus among the 20 ESM member states that defense and security matters trigger financial stability risks. This is a precondition for the ESM to become active. So we are ready as ESM to work with the member states to see if we can act on this basis. Second, the importance of the private sector. And then I have a third point, and then I'll be finished, I reassure you. The importance of private investments. Yeah, involvement of public money is important, but we need to crowd in the private sector. Mario Draghi mentioned the figure that eventually 2/3 of his 500 billion need to come from the private sector, and this is key. I remember Werner Hoyer always reminding us about that. So it is important to make progress on Capital Markets Union. The Eurogroup recently agreed, after a long discussion over months, on a roadmap to achieve this. And so I think the new Commission, the new institutions, after the Parliament elections, European Parliament elections, will be in a good position to know where to go from there. Third and last, economic growth. Economic growth of Europe is lackluster, which is a nice formula. It's a third of the one in the United States. And also our investment hasn't reached the levels, public investments, that we need. But to stimulate economic growth, we need to do our homework, and we need to do the structural reforms at national level. We need to do that in parallel to other initiatives. That being said, again, it is key to modernize and update our EU single market. And I use the word modernize because the single market is a success story. It's not that we're criticizing what we've done, but in the last 30 years, the features of our economies have completely changed. So we need to do the update. We need a single market 2.0 to foster growth for our economies and to ensure the well-being of our citizens. So I see this as a key priority for the future. Now, let's be realistic, and I would like to quote someone whom you all know, who has had this wonderful sentence: "The construction of Europe is an art. It is the art of the possible." Now, who said that? Jacques Chirac. So obviously, it is the art of the possible, but put that also in the context of Jean Monnet's statement, which has been proved a good forecast that in times of crisis we overcome obstacles that we thought we could not do. In a couple of weeks, the ESM will have its annual meeting here in Luxembourg, and we're going to present as management our toolkit review, so our financial instruments on that occasion. And I look forward to the possibility to discuss the future of our instruments, to see if they are fit for purpose in this challenging world of ours. Let me concluding by saying the ESM is committed to supporting its members as effectively as possible. It is committed to its mandate, which is to help ensure stability within the euro area. Thanks a lot.